heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, AI investments pay off for Meta. Details to come, and ARM slumps as the chip company holds off boosting its outlook. We speak to the CEO, Rene Haas. Plus, Nvidia shatters records, adding $329 billion to its market cap in a single session. Full coverage ahead. I want to start on that Meta story. This is what the stock looks like. You know, it's basically trading as it stands on track for its biggest jump since February. We know all about the capital expenditures commitment, slightly boosting the bottom end of the range, but it looks like this whole AI thing is helping the top line, at least if you look at the sales outlook for the current period. Throughout the show, we're going to get a lot more on Meta. Now, one stock that's going in the other direction is the chip design firm ARM. I think we're down around 15% as it stands. They smashed it in the quarter gone relative to street expectations. But the story around ARM, as we bring up the stock here, down more than 15%, is simply that they resisted the urge to boost their outlook. And that raises some questions. The questions should be answered now. We have ARM CEO Rene Haas standing by, joining us here on Bloomberg Technology. I mean, Rene, good morning to you. That is the story. What were the factors behind you not boosting the outlook? What were the factors that made you cautious? Maybe it's specific end markets. Maybe it's your view of the macro situation around the world.
Yeah, thank you, Ed, and a great question to kick off with. The way I think about it is as follows. This is our fourth quarter as a public company. It is our fourth quarter of record revenues. As you said, we smashed it last quarter, over $930 million of revenue. So super happy about the quarter. Last quarter, 90 days ago, we raised the annual guidance about 8 to 10%. So when we looked at the outlook for the year, 90 days later, coming off a great quarter, we just didn't feel the need to raise expectations again. So that's really just the backdrop. It's quite simple. We raised the guidance for the year last quarter, record quarter this quarter, and we're maintaining at this point.
Rene, is there anything you can tell me about specific markets that you serve where you see some caution or some hesitation, but you're also able to see whatever it is holding you back working itself out?
Yeah, remember, Ed, that we have two components to our business. We have the licensing business and the royalty business. The licensing business, which is really the forward indicator of demand for ARM technology, never been stronger. The licensing revenue year on year up 70%. What's driving that? That's demand for building new complex chips, more demand for ARM, more compute capability. So that is a harbinger of forward type of demand. Royalties were also up year on year, almost 20%, largely driven by smartphone growth, where units have been modest, but our new version 9 is driving high royalty growth. So in general, we're very, very optimistic about the long-term outlook, particularly because of the licensing activity being so strong.
One of the areas, Rene, you know that I cover a bit more deeply is automotive technology, and I'm just trying to draw parallels with different names out there, understand what's happening. Mobileye told us this morning, for example, that particularly in China, but globally, some of their customers just stopped making orders for the second half of this year. I understand that from ARM's perspective, it's different, right? You think about the pipeline of a specific chip that you're involved in the design of. It's much further afield, longer term. But do you see in that industry in particular any sort of either cyclical process happening or some specific weakness?
Yeah, I think the way we think about the automotive market is we are growing faster in terms of demand for our technology than the market itself. So we were actually up double digits last quarter in automotive royalties. And that's really a function of A, gaining market share, but more importantly, the quality of the technology that's going in is much higher. These are more complex compute platform devices. They run a lot of software, whether it's for IVI, EV, autonomous. So we're very, very bullish about the long-term automotive outlook. The near-term inventory issues that go back and forth, we haven't been impacted by that so much because, as I said, we're gaining share, and the complexity of our own technology being used just keeps going up.
Rene, I don't know if you'd agree, but I think the sort of common theme of this earnings season is capital expenditures relating to infrastructure for AI. And my question simply is, what direct benefit does ARM get from any of that process or investment cycle?
Yeah, thank you for the question. We get a bit of a dual benefit. There is a lot of CapEx going into overall infrastructure scale out. There's general purpose compute. ARM benefits there because our low-cost, low-power processors are very, very efficient in terms of building data centers. You have AWS, you have Microsoft, you have Google. They've all announced products based on ARM. And then you have the AI data centers, which are very, very complex, require a high degree of customization. Power efficiency, even more important there. And that's been a great tailwind for our business. Just look at what Nvidia announced with Grace Blackwell, a very, very complex, not only chip, but platform based on ARM using their most advanced GPUs to drive the most complex AI data centers. So for us, we broadly view this AI CapEx expenditures as a tailwind for the business.
Rene, you mentioned Grace Blackwell. It takes me to one of our audience questions. So when I said you were coming on the show on social media, I actually got quite a number of submissions for you. And one is straightforward. Does ARM plan to design its own accelerator to compete, I guess, against some of the partners that you're with out in the marketplace?
Yeah, no product announcements today, Ed. Sorry, we're just here to kind of talk about the past quarter and our outlook going forward.
No product announcement, but that would indicate from a sort of, I suppose, academic or R&D standpoint that you at least think about it.
We think about a lot of things, right? I mean, our technology, as broad as it is, as many markets as we can play in, my job is to think about a lot of things. So I think that's a safe statement.
Away from the sort of scale of infrastructure and data centers, I think the AI PC is something that's pretty much dominated the news cycle so far in 2024. One of the other audience questions was, when do we see sort of a truly competitive ARM-based Windows product that can take on the performance of Mac's or Apple's own silicon that goes into a Mac? I know that you think about this field a lot, but on the competition side, what do you make of that question?
Yeah, so I want to be respectful of my great partner Apple and their ecosystem, but there are some great products out there today. Dell XPS has some amazing technology. The battery life, I think I was reading online. In fact, I was looking to buy one of them. The advertised battery life is 19 hours. Now, for a Windows machine, that's rather unprecedented in terms of battery life, all-day use, don't need a brick. So Dell and Michael and his team have done an amazing job developing some great products. So I think there are great products out there today.
For all of the AI PC announcements, are there any examples of things that actually sort of translate into revenue for ARM?
Well, again, when you think about AI PCs running on ARM, that's revenue for ARM. And I think the way we think about the AI PC Windows on ARM market is probably less about the shipments this quarter, but the long-term trajectory. I think what you're now seeing is single suppliers that are in the market today. We've heard from a lot of sources that in the upcoming years, there's going to be more and more vendors building chips for the Windows on ARM market. That's just going to be great for us because not only does it fill out the choices of units for the end market, but it's going to drive growth for us. So I said a few months ago that I thought ARM could be a 50% market share in the Windows market in 5 years. I do believe that. We're about 100% of the Apple operating system, so 50% of the Windows market doesn't seem too ambitious in 5 years.
4 quarters ago, probably a number of years ago, you and I might have started a conversation talking about the smartphone market. So we'll end there. What's going on in the smartphone market right now? And whatever is happening at sort of an industry-wide level, is there anything specific relating to ARM at the high end of the smartphone market vis-a-vis sort of lower-end models, the middle market, that you can tell me about?
Yeah, I don't want to sound like a broken record saying the trends that are going on in the smartphone market are good for ARM, but I'm going to say that because what we're seeing in the smartphone market is while unit growth has been modest single digits, there's been significant growth in the premium segment, the high end. And for ARM, that's where we draw the highest level of revenue. The reason for that is we use version 9 up in that area of the stack. That's a much higher royalty rate than the previous version. And those version 9 smartphones in the premium space, they use a lot of ARM processors, in some cases 12, 4, 14, 16, depending on the mix. So it's a true compute platform solution, which drives growth for us, which is why in the last quarter, where units were single digits, our smartphone royalties were up 50% year on year.
I had a similar conversation with Lisa Su of AMD yesterday, but is that reflective of a broad market movement, or is it something special ARM's doing to outperform in the market?
I think it's a combination of both. A number of years ago with version 9, we added some significant compute capability that was really to drive performance. Now what we're seeing, particularly in the near term and going forward, is the SKUs that are being built, people are trying to put as much compute performance as possible in those phones. For example, when you think about the large language models such as Llama or Gemini, when those phones were developed, those models didn't even exist. So not only are you having to run all the complex software, the camera apps, but now you want to run an AI workload. So people are just putting as much compute as possible into those high-end chips, which is good for us.
Rene Haas, CEO of ARM, thank you very much. And for what it's worth, the stock hit session low, down 16.2% during that conversation, but a lot learned. Let's stick with earnings and look at Etsy, which released their second quarter earnings on Wednesday after the closing bell. Etsy CEO Josh Silverman joined me earlier to talk about it. Have a listen to this.
We're really proud of the fact that in an environment where we're really swimming upstream with a really tough macro, and I think the story of this quarter has been, for discretionary products in particular, it's a tough time.
And that's hitting the consumer directly, basically.
It's hitting the consumer directly. Wells Fargo published a report just recently saying 60% of Americans say that by the time they're done paying their essential bills, they have very little money left over for anything else. And yet we are actually maintaining, we have roughly the same number of active buyers as our all-time high, 91.5 million. We came in actually above the top of our guide or at the top of our guide on every metric. So we're really proud of how we're doing, and we're aware that it's a super volatile macro. But in this time when we're swimming upstream and maintaining, we're building muscle that we know is going to make us stronger. And most importantly, we're not letting ourselves be dragged down. We're in a moment where there's a race to the bottom right now around who can sell things the cheapest. And Etsy is not focused on that. We're focused on making Etsy even more Etsy, leaning into our point of differentiation. And to your point about AI is going to be so helpful for us because, as you know, there's over 120 million things for sale on Etsy, and every single one of them is unique. Every single one of them is made just for you. So organizing that in a way that's easy to navigate is a very tough challenge. There's no army of humans you could hire to do that. But LLMs are really good at organizing huge amounts of information in a way that's easy for humans to understand.
That was Etsy CEO Josh Silverman. Now coming up, Meta to the rescue, delivering on earnings and easing some of those big tech growth concerns. Stock up almost 7%. A lot to talk about. This is Bloomberg Technology.
There are all the jokes about how all the tech CEOs get on these earnings calls and just talk about AI the whole time. It's because it's actually super exciting and it's going to change all these different things over multiple time horizons.
I think we should probably update that photo. That was Mark Zuckerberg, the Meta CEO. He doesn't look like that anymore. Meta posting better than expected Q2 results, and it signals that the company's AI investments are starting to pay off, triggering the stock's biggest one-day rally in around 5 months. That level, 7% gain, on track for its biggest jump since February. Let's get right out to our Meta reporter, Kurt Wagner. I mean, that was the question. You spend all this money and the CapEx number at the bottom end of the range slightly boosted, but does it help you make money in the sort of normal areas of your business? Did it?
Well, this is the story that they're trying to tell, right? Which is that AI investment is impacting their current ads business. It's making their ads more relevant. It's making, it's helping advertisers even create new ads with Gen AI tools. It's helping the timeline. It's giving people more relevant content, so they're sticking around longer. This is the narrative that they're trying to tell on the more immediate side. And the challenge, of course, is, as you point out, they're investing very heavily in the future as well. And so they're trying to balance, like, hey, the AI is paying off now, but it will also pay off in a couple of years when these glasses, these large language models, the metaverse comes to fruition. It's a tough balance for them, but they were able to sort of do that with the Q2 earnings this week.
We're just showing the numbers or the revenue numbers by business line. And I think that's the bit that we're trying to understand. You and I have all these conversations with very smart people outside of Meta who give them a lot of credit for their work in the field of large language models and the future applications of generative AI. But it seems like the story here is that it's really helping advertising, which is what they've been basing their business on all along.
Yeah, and it's not as sexy of a story, right? Because it's like, hey, investing billions and billions of dollars into these large language models is going to, improve the ROI on our ads product is not really the exciting AI story that a lot of people want to hear. That's chatbots, that's AI smart glasses and assistants and things like that. But I do think there is an element of this investment that is paying off more in the short term. We heard a lot about that yesterday. But I don't think that's what gets Mark Zuckerberg as excited, right? That's a necessity. That's what's going to fuel and fund these bigger visions he has. But I really think, when he talks about AI, he's predominantly talking about this futuristic technology, this next wave, this next computing platform that he really wants Meta to own.
Just really quick, our audience around the world will have different relationships with Meta and its products. But I found the data on growth across the family of apps or family of products really interesting. Why is that going well?
Well, they have WhatsApp, I think, is sort of a secret weapon that a lot of people don't think about because it's not as big a part of the business, right? But I think this is also just to the staying power of the core network, Facebook and Instagram. It's like these are products that are still growing, that are still finding new people despite years and decades of existence. And, they're adding Threads to the mix now, too. I don't think that's counted in that daily active people tally, but eventually it will be. And Mark Zuckerberg was talking about that with a lot of praise yesterday on the earnings call.
Bloomberg's Kurt Wagner, thank you very much. Now, the other sector we're looking at is chips. The US is weighing unilateral restrictions on China's access to AI memory chips and equipment capable of making those semiconductors as soon as next month. Back with her latest reporting, Bloomberg's Mackenzie Hawkins. We actually talk quite a lot about this on Bloomberg Technology, that, for all the hype around AI and the GPU, you've got to have that high bandwidth memory access as well to make it competitive. Just give me the basics of what you've reported and when it's happening.
So the U.S. government recognizes that too, that you can't make an Nvidia GPU work without access to memory. And officials have been considering for months adding to the restrictions that they've already replaced on China's access to logic chips, which are the brains of devices, to attack the memory side, which handles data storage. And they're working on this massive export controls package, probably the most significant one that we've seen since the October 2022 rules initially rolled out and sort of changed the global landscape for semiconductors. This list could include restrictions on high bandwidth memory above the 2.0 generation, so capturing Samsung, SK Hynix, and Micron's latest models. Also on the tools used to make those chips. Then there's a separate massive restriction on additional tools and equipment used across the industry that would primarily affect U.S. equipment companies. So think Lam, Applied Materials, and KLA, with carve-outs for their Japanese and Dutch rivals. So this is really a massive package. It's what will probably be the Biden administration's last big swing in this space, and it could be unveiled as soon as a couple weeks from now.
The strategy to make US chip sector more competitive is two sides: restrictions, like you just outlined, and incentives. And the other big story you reported was one name, Applied Materials, not getting access to funds in incentives.
Right. So we have the export control side of the coin, and we also have the CHIPS Act, which is a $39 billion subsidy program designed to bring chip manufacturing back to U.S. soil. And so far, we've seen over almost 90% of the funding committed to names like Intel, Samsung, TSMC, and Micron for these massive commercial fabrication facilities. But more than 670 companies expressed interest in the funding. So there were always going to be companies that didn't get it. The biggest name perhaps among them is Applied Materials. They have this $4 billion research and development project that they're working on in Sunnyvale, and they had hoped to get government support for that. Unfortunately, that didn't work out for them after the U.S. scrapped part of that grant program that was specifically designated for commercial R&D because of infighting about a separate program on military chips. So not a great piece of news for Applied Materials, and they've always said that the scope of that project will depend on U.S. government support.
Mackenzie, just very quickly, is there any money left then from the CHIPS Act, or it's now all accounted for?
There's a bit left, something on the order of $6 billion to allocate. We should expect to see, Commerce Secretary Raimondo has said that we'll see announcements through the end of the year eating up all of that funding. And after we've seen announcements to the major big foundries, we'll probably expect to see a lot of smaller supply chain investments between now and the end of the year.
Bloomberg's Mackenzie Hawkins very busy with a lot of reporting. Thank you. Time now for Talking Tech. First up, Olympic partner Atos reported a loss of $2.1 billion for the first half of the year on weaker customer demand. The French IT company has struggled with debt, accounting errors, and industry-wide headwinds that has wiped out nearly $14 billion of its market value over the past 7 years. Plus, Reddit acquires startup Memorable AI in its first acquisition since going public in March. The startup uses generative AI to help marketers create better ads with more effective text, images, and videos. Reddit says the acquisition would improve the quality of its ads on their service. And Samsung's chips boss issues a warning, saying the company could be at risk of getting caught in a, quote, vicious cycle if it doesn't revamp its workplace culture. In an unusually harsh memo to employees, the head of the chip division said Samsung must take steps to eradicate communication barriers and stop, quote, hiding or avoiding problems. The letter comes after recent missteps by the company in supplying memory chips for AI. Now, coming up, we're going to be joined by Denny Fish, portfolio manager at Janus Henderson, to dive deeper into Meta and the other tech earnings. Real quick check on shares of Mobileye. So this is the Jerusalem, Israel-based maker of chips for advanced driver assistance systems. That stock down 20%, trading at a record low. Why? Because 2H, it downgraded its revenue outlook. Its automotive customers stopped placing orders. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in New York. We're going to check in on the markets. Big tech earnings in focus this week. Meta posting better than expected quarterly results, helped by new investments in AI. The attention now turning to Apple, Amazon, both reporting after the closing bell. But let's stick with the equity story. The Nasdaq 100 pulling back after a monster rally led by Nvidia on Wednesday. The stock recording its biggest advance in over 5 months. And here's the bit, adding a record $329 billion to its market cap, destroying the single-day record that it had previously already owned. There's a lot to talk about. Let's keep the conversation going. Denny Fish is a portfolio manager at Janus Henderson Investors. And let's start with Nvidia. We say it's a moment in markets history. It broke its own record, but it's one of the bigger positions you hold, Denny. So when you see the red headline on the Bloomberg terminal, how do you react? How does that make you think?
Well, I think, Nvidia has been a remarkable stock for the last year and a half, and that's primarily been because of the financial performance. I mean, the ramp in revenues that we've seen with its AI chips and GPUs is like nothing we've ever seen before. And, where the market's at right now, it's really this push and pull. And what we've seen, if you just look at the hyperscaler earnings so far, and particularly the CapEx forecasts, the market is just really hinging on every word that we're hearing. And, effectively what we've heard is that nobody's blinking. And you have seen CapEx go up at Google, you've seen CapEx go up at Microsoft, and you're seeing CapEx go up at Meta, and all of those companies seem to be implying that there's no end in sight, at least, through 2025, and that should be good for Nvidia. And If we actually look at the other data points in the industry, AMD just reported and the numbers were fine, but, it's really just a really, really small fraction of the amount of AI-related chips that NVIDIA is selling, and NVIDIA's embarking on probably its most significant product cycle ever with Blackwell as it goes to a full systems approach this fall.
So actually, I ask you about that specific point. I've discussed with Jensen Huang the annual cadence of new product refresh. But the bit that's kind of concerning or hard to understand is, what about all those companies, the hyperscalers, but also others, that invested at the H100 generation, and they may have only just got that capacity online, and then suddenly they have the option or choice of whether they buy the next cutting-edge generation of chip, upgrade. And I think that Jensen's probably talked to you as well, right, about the ability to swap in and out those generation of GPU quite easily. But it's hard to fathom, really.
Yeah, well, what's really interesting, and I'll give you a couple data points. Last night, Mark Zuckerberg announced this publicly. He talked about that Llama 4, which is the next iteration of their open source large language model that they just, have been evolving, is going to require 10x the compute that Llama 3 required. And why that's important is, if you talk to the leaders in industry, you'll hear a comment, and that comment is, we want tomorrow's GPUs. And the reason you hear that comment is because one of the single biggest bottlenecks to actually advancing these large language models, whether it's OpenAI, Anthropic, Google with Gemini, Llama, whatever it might be, you need increased compute power. And that is exactly what Blackwell brings. And so the important part for these companies is making sure that they have the ability to actually create fungibility with the GPUs, so that when you use H100s and then you're going to move to Blackwell, you can actually use those H100s for inference, or you can use them for other parts of your company. Whether for Microsoft that could be to support Office 365 and Copilot, or GitHub Copilot, or in Meta's case to support the recommendation engine, or content creation, or whatever it may be. And so having that fungibility of the GPUs, but then also having the ability to lean in hard to the latest generation so that you can push the envelope with these frontier models.
So Denny, this is a good point to go to Apple, because it's a different story, right? They are not a hyperscaler. They don't make the same direct investment in infrastructure. The CapEx has always been low, but the AI story is the same. It's a smaller position for you, but your approach going into this evening?
Well, it's always hard going. You just never know, right?
Okay.
We're here on the day of earnings. But here's what I can say. We were really impressed with Apple Intelligence and what we saw. The world was waiting to hear what they were going to deliver. It's not ready for prime time yet. This is unlikely to be a massive cycle, with the 16. But as we start looking into next year, and if they get Siri right, and here's the beauty of the Apple model. All this CapEx, this $200 billion plus that the hyperscalers are deploying into CapEx, Apple gets to leverage that because they are the gateway to the AI-enabled internet, through the iPhone interface. And I think that's really underappreciated as it's related to Apple. It's a very capital-efficient model.
And Denny, sorry to jump around, but Amazon, I think with the focus then switches back to AWS and whether the CapEx story and the investment cycle is still intact.
Yeah, so, Amazon's a little different. And the reason it's a little different is, as I mentioned, if you think about Alphabet, you think about Microsoft, you think about Meta, and that fungibility element of GPUs and capital expenditures. Amazon doesn't quite have that. They can't really repurpose a bunch of GPUs into their core business because it's not a daily engagement app like Office 365 or Copilot or Meta or Search. And it really does hinge on their ability to provide the underlying compute for other companies. And so they're really in a push and pull of, having been the dominant provider of cloud computing services for the last 15 years and now pivoting their business to try to compete as aggressively with Microsoft and Alphabet in this next generation of cloud compute, which is AI enabled.
Denny Fish, Portfolio Manager over at Janus Henderson. Really appreciate it. Thank you. Some breaking news crossing the wire. We're getting more details on the prisoner swap between the US and Russia, where Wall Street Journal reporter Evan Gershkovich and former US Marine Paul Whelan are being returned. Vladimir Krasikov will be released in the historic 7-count prisoner swap. Krasikov was serving a life sentence in Germany for the 2019 killing of a former Chechen rebel in Berlin. We'll bring you any additional updates as they cross the wire. President Biden plans to deliver remarks at noon about the Americans freed from Russia. Okay, back to one of Bloomberg Technology stories. Amazon is showing interest in robot software maker Covariant. That's according to sources. The company, which was founded in 2017, has raised $245 million from investors, and it was valued at $625 million in a 2023 funding round. Joining me is Bloomberg's Katie Roof. And Katie, you and I broke this story together last night, along with Bloomberg's Spencer Soper. It's very in line with what Amazon's focused on. Give me the details that we know.
Exactly. And so this is a warehouse robot software maker using AI. For those who've been paying attention for a while, it reminds of Amazon's acquisition of Kiva Systems in 2012, where they bought a warehouse robot maker. But this is obviously, modern technology in this space, and it could sync with other, warehouse type robots that, can put things together and package things, which is exactly what Amazon needs.
We should point out that Amazon and Covariant both declined to comment on the story. Amazon's at a stage where it has more than 750,000 robots around the world doing all sorts of things. One source kind of outlined to me Covariant, even though it's raised all this money, is a little bit more of an R&D, research project, and you kind of need Amazon to get going. The market is interesting because is money hard to come by, Katie? Do you need kind of a savior like an Amazon to come in if you're a smaller startup that's still kind of building out your tech?
Sure. I mean, there's certainly capital available for the very cream of the crop top startups right now, but a lot of investors are a little skittish given that we've been, there were a couple years of a correction. So having a, large strategic like Amazon, provide resources would certainly help this startup continue to grow in-house inside Amazon.
And Katie, real quick, we're short on time. XAI looking at character, Musk weighed in. What's going on?
Sure. This is another AI acquisition rumor. We've heard there have been some sort of interaction between Character AI and XAI about a potential acquisition. Obviously, a deal is not yet done, and that is what Elon is weighing in about. But, we have heard that there is something going on there. So it remains to be seen whether a deal actually happens. Yeah,
I heard there's something going on there too. Bloomberg's Katie Roof, thank you very much. Okay, before we head to break, we want to turn our attention to the Bank of England for a moment. The Bank of England cut interest rates for the first time since early 2020 and signaled further cautious reductions ahead. Moments ago, we sat down with Governor Andrew Bailey. Have a listen.
Don't expect we're going back to zero, because zero was the product of huge global shocks. Starting with the financial crisis and obviously with COVID as well. I think to get to there, something really bad has to happen that we're not currently expecting. We'll be lower than where we are today, but I think it's very clear that we're not going back.
I want to talk about GitHub, a leading AI-powered developer platform. The company announced expansions in their AI strategy with increased access to and new extensions of their Copilot models. GitHub CEO Thomas Dohmke joins us now for more. And you've been very busy on social media. You've been hinting at what you've been working on. Now's the opportunity for you to talk about it a bit more explicitly. What's going on?
It's an exciting day. I'm so full of energy this morning. With GitHub Models, we're bringing the power of industry-leading AI models, small and large, open and closed directly to the over 100 million users on our platform. And, developers are no longer just writing back-end and front-end code. They have to integrate different machine learning models right into their apps, and we want to catch them early in the developer lifecycle. So we're giving them access to popular models like Llama 3.1 or Mistral, Large Tune, of course, the OpenAI GPT models, Microsoft's models, for free right on GitHub, so to enable them to explore, to play with these models and put them into their apps, and when they're ready to go to production, to give them a glide path into Azure AI.
You said on X that hint, it's not Copilot, but it's not AI. Just explain in layman's terms what you were trying to get at with that.
Yeah, in the past, when I was on the show or when I was on media, we talked with an AI at GitHub mostly about Copilot, our AI pair programmer that helps developers write code. It helps them, to do the work on a day-to-day basis. With GitHub models, we're giving them a component to put into their app. We're giving them access to models like Llama, Cohere, AI 21 Labs that they can play with, that they can send prompts to, and then put that model, into their application code and run their own scenarios on top of these models. So it's not Copilot, but it's AI and it's machine learning models readily available for developers.
The other big news of the week came during Microsoft's earnings and the discussion around GitHub. It's your growth. I think the number to go to is the annual revenue run rate of $2 billion. For you, Thomas, that seemed like a really important milestone. Why?
It's important, from two perspectives. One, 6 years ago, I was part of the team at Microsoft that acquired GitHub, and we had high hopes for this to be a successful acquisition. So I think, the 2 billion revenue run rate shows that we have done a good deal at Microsoft. We not only bought a company, but we actually invested into GitHub. We set on the power of this developer community to create, an ever-growing revenue stream. In the earnings before this one, we said we are growing 45% year over year. This time we announced that the run rate is now over $2 billion US. And more so, in the last year, 40% of our growth came from Copilot. 77,000 organizations are now on Copilot. It's no longer about the early adopters. Copilot has crossed the chasm. The question really everybody needs to ask themselves, am I part of the early majority, or am I going to wait and become, the laggards of adopting AI technology in my developer lifecycle?
Thomas Dohmke, CEO of GitHub. It's great to have you back on the show. Great to catch up. Thank you very much. Let's get back to Meta and Meta's results. The stock, by the way, off session highs, but still up 6%. The tech giant beating estimates on its advertising growth. In particular, Rachel Tipograph, founder and CEO of the e-commerce marketing platform Micmac, joins us now. And Rachel, you have this rich data set tracking where advertisers invest their dollars across not just Meta, but its competitive landscape as well. And I think what's interesting is that the data you track was basically justified by their forecast for sales in the current period. Just your response to that?
Yeah, thanks Meta for verifying our data. So yesterday, Zuckerberg reported 11% year-over-year revenue growth. Micmac works with over 1,700 of the biggest brands in the world, powering their commerce media. What did we see in our data? We saw 10% year-over-year revenue growth. So it's absolutely spot on. Meta remains the most trafficked brand advertising channel at Micmac. On any given day, it represents about 40% of our total traffic.
So what's interesting is you have the data, and then what you need to do is find the reasons behind the data, right? And we went into the earnings print solely focused on artificial intelligence. It seems like the early work and investment Meta's made in AI is just making their ads more competitive. Is that fair?
AI is part of it, but I actually think something comes before it. For the last 2.5 years, Meta has stopped focusing on shiny objects like the metaverse, and it got back to business and focused on its core revenue stream, which is advertising. Meta had to respond to Apple's privacy changes, and it responded in a big way. Meta did a huge campaign to every big global advertiser and essentially encouraged them to integrate with their event attribution API, which bulletproofed the effectiveness of the ads. That was number one. Number two, Meta's also made a concerted effort to partner with retailers and essentially enable off-site retail media within the Meta platform. That also improves the effectiveness of their ads. I would argue that AI is number three. What AI is doing for Meta and for really all advertising platforms is lowering the barrier to entry. One of the major barriers to entry in advertising is creative. And so if Meta can remove that barrier, it actually opens themselves up to any business on the planet. So I suspect with the investments in AI, you will see their small, medium business advertising grow.
So I want to linger on that point a moment longer. We just showed the pie chart breaking down where advertisers are placing their money. The story is the one that you're telling at least, is so similar to last week with Alphabet. Again, we went into it really focused on AI, but the biggest contributor to growth was just the search business, the legacy business.
100%. It's all about making every dollar stretch for the biggest advertisers in the world. You know, on top of the big tech earnings, you've also had the big CPG earnings in the past few days. And what they're struggling with is top line growth. Where is top line growth going to come from for these advertisers? Investing in channels like Meta, Google, and TikTok. Going back to that pie chart, what you also see is, yes, Meta is the most traffic source within the Micmac platform. But what's number two? TikTok. TikTok now represents 20% of our total traffic. If we were speaking 4 years ago, TikTok wouldn't even be in that pie chart. So if I was Meta, I think the big headwind that they now need to worry about is TikTok. And they alluded to that in their earnings as well.
They did allude to it. Okay, so let's look at it from the opposite perspective. TikTok faces a divest or ban scenario in the United States. If you're an advertiser, why would you keep putting dollars into that platform if you know that that's a potential risk down the road?
Because of the effectiveness of TikTok. The reality is with advertising, it's very easy to move dollars from channel to channel. We've been on the show. We've talked about X in the past. We saw 100% decline in X traffic. Did that matter to advertisers? No. They just reallocated the dollars elsewhere. So until something actually happens with TikTok, you will continue to see brands invest in that platform because of the effectiveness of the ads. In 1 year, we've seen 190% year-over-year increase in TikTok traffic. We only saw 10% in Meta. Again, if I was Meta, I would be very concerned about TikTok right now.
Rachel Tibergraf, founder and CEO of Micmac, excellent breakdown of your data and linking it to Meta's own data. Thank you very much. That does it for this edition of Bloomberg Technology. There is one big earnings evening left to go, but so much to recap on the podcast. You know exactly where to find it. Apple, Spotify, also on iHeart. This is what's to come, right? And this is the picture of the markets right now. We await Apple, which is down 0.9%. We await Amazon, which is down 0.9%. AI is going to be the story, but as our guests outline in the show, in very different ways. Meta off session highs, but continues to trade on track for its biggest jump since February of this year, with at the index level, the Nasdaq 100 down significantly now, down 1.5%. Nvidia a part of it. This is Bloomberg Technology.